Hey everybody, welcome back to the channel. We are talking about Cathie Wood and her portfolio. It's been a while. I think it's been like 2 months last time since I gave a portfolio update on Cathie Wood's literal portfolio. I haven't seen it in a while, and I actually saw it on my morning open live stream. I do those every day at 9:20 Eastern, and I was like, why don't we go through it? Because I haven't gone through it in a while. And the other reason I really wanted to go through it is because I am looking into Zoom as a potential buy for a stock, given how low it has gotten. And I wanted to understand, what is Cathie seeing it? How is she understanding it? And what is her overall portfolio looking like, along with a couple of other things that she's done. And I'm going to show you some of her trades she's made on the daily. So let's look at the portfolio right now. ARK Innovation, this is the flagship fund. This is the fund where it's managing about $40 billion, and ARK takes like, what, a 1 to 2% management fee. So again, the other thing about these ETFs is they make a lot of money regardless of if the ETF performs or not, because they are managing dollars. And investors, $40 billion worth of investor capital, has agreed that ARK Innovation should manage their money, or at least manage a section of their money. Tesla, 959,000 shares, 852 million in market value, as I plug in my charger. Zoom, 7.8 million shares, and this is the big one I want to talk about because Zoom is down another 15% to about 85 bucks. I think ARK's average is somewhere in like the 150 to 200 range. They were buying it heavy during the pandemic. That's down 7.8 million. Roku, 8.3 million shares. Block, 5.4 million shares. Teladoc, 11 million shares. Teladoc is another one I want to talk about for a bit because that one's a little bit scary. And you go down further and further. They have Coinbase, 4.59 million. They had about 6 million, got rid of about 1.2 million shares. They had like 5.3 million, got rid of 1.2 mil right before Coinbase ran up from 50 to 100. So the insider trading stuff, like little scandal that came out about Coinbase, got them a little worried, but they missed that on the Blackstone kind of pop partnership. Shopify, 8.3 million shares. DraftKings, 14 million. Roblox, 5.2 million. One of the other ones that's interesting to me is Ginkgo Bioworks. This is about a $2 stock right now. I think at its height, it was like 15 bucks. They have 70 million shares of this company. Now, the float on Ginkgo is a little bit larger. I think it's about 1 billion shares outstanding, but 70 million shares of this company. If this stock even goes to $10, which is, it's at $2, that would be like a 500% return right now. It's a $700 million position for ARK. And I think that's why they've been buying it so incredibly heavy. They also have 20 million shares of Robinhood still. NVIDIA is the very interesting one. They bought 300,000 shares of NVIDIA last week, and they sold it for a loss yesterday. And that's what I'm about to pull up right now on Twitter. There's a great account called ARK Invest Daily that basically tweets all the trades they make daily. This is what happened yesterday. So Zoom Video Communications on the dip. Zoom, again, going from about 110 to 85, 713,000 shares. Ginkgo Bioworks, another 190,000 shares, and they bought 126,000 more shares of Zoom and the ARK W Fund. The reason Zoom to me is relatively interesting is because they projected to be $700 base case or bear case by 2026. That means a 600% return even by 2026, and a bull case or a base case of about 12x to about $1,200 to $1,500 in 2026. The Super Bowl case is like $2,000. So if this happens, Zoom is going to be the best stock to buy probably right now. Like if Zoom gives you a 12x over the next 4 years, I think there are very few stocks, including Tesla and Google, that are going to be able to give you a 12x in the next 4 years. That's why I'm trying to understand their thesis very deeply. Their CFO came out yesterday and said growth is happening on a more linear scale, not exponential. That to me is showing me that it's like, where is the exponential growth going to come from to get you to do 45 billion in revenue or whatever ARK says it can do? So I'm thinking of that deeply, but I'm also trying to understand a lot more of their positions. And then you can see some more things. They bought another 63,000 shares in the ARK G fund of Ginkgo Bioworks. Ginkgo Bioworks is a stock. It's at $2, and you're like, okay, you know, is it worth it? Look at this: 2.5 million shares of DNA was bought 2 days ago, on August 22nd. Now, the reason I have problems trying to think of buying those shares is primarily because of Teladoc. As I said in the beginning, Teladoc worries me. Teladoc went from 365 down to 160, down to like 80, and ARK was buying. And you could imagine, okay, if ARK is continuously buying the stock at 80 bucks, they're going to figure it out, right? Like obviously they have this massive level of conviction, and if I just want to follow what the person is doing, then I'm going to follow ARK. And then it dropped down to 30. And that's where I get scared about Zoom, because I'm like, okay, Zoom's balance sheet looks way better. They're putting up $1 billion of revenue per quarter. I mean, 1/6 of their market cap is what they're doing in revenue. It's not that bad. Their price of sales is like 6. So it's also like, okay, they're doing well, but what if it's another Teladoc situation where it collapses, down to 60, 70 bucks? Zoom is also, or 40, 30 bucks. Zoom is also looking good on the RSIs. The RSIs are indicating that it's oversold. The fundamentals, again, are much more healthier than Teladoc, which is why I'm considering it a lot more seriously. I also use the product and I like it a lot. It's one of those standalone products that I think is superior to every other product in the market, even though it's a one-trick pony, you could say for now. But it's a little bit scary, given how high it is in the portfolio of ARK and how much it has the potential if anything happens to collapse. So I wanted to have a better understanding of what's going on in ARK's portfolio right now. ARK is trading at about $43. I sold the 25 shares I had back at $48 roundabout, and I put that, I think, $1,200 just into Palantir. Let's go to ARK Innovation right now. The other thing I wanted to talk about ARK, it's at 45 bucks for the day, up 3%. As you can see, its all-time highs were about 159 February 2021, got down to a low of 35, and it's up decently from 35. That was back in May. But since then, it's just been a constant decline. Spotify is also in this index, and they sold out of most of their Spotify position. They had about 2.3 million shares, reduced it to about 716,000. They have not liquidated the rest of those 716,000 shares, and I've asked myself why. I think I've analyzed Spotify very deeply as a company, as a business, as a long-term potential. I actually think the stock relatively will do well if they can figure out how to make a profit, because they're still unprofitable. They have a consumer platform that is attractive to a lot of people. So when I asked myself why Cathie Wood was selling, the logic I came to was, if they believe this is a Netflix of audio type of company, then it's going to be in a very precarious position where they have to keep buying content to be able to sustain their ability to grow, and that hinders them to be able to make a profit. So even though the company's growing, if they're not profitable at the end of the day, like, what's coming back to shareholders, and how much is the market willing to pay for more and more of a dollar of growth when they don't see profits, especially in these macroeconomic situations with interest rates being the way they are. So I think it is important and interesting to understand what's going on with the overall portfolio. The obvious winners that they're betting on, to me, is DNA, even though it's not at the top of the list because they have 70 million shares of it. Regardless, Block, Roku, Zoom, Tesla, and Teladoc. Now, they have been selling Tesla a little bit. They also are buying more Roku, even after Roku's pseudo collapse went from about 90 to 70 bucks off their earnings last quarter that weren't that good as well. But I think we have to see. What is ARK choosing to do. I mean, like, some of the things that make me doubt a lot of what's going on is the Coinbase thing. Like, why are you selling Coinbase at 50 and then it runs up to 100? That's just like mismanagement of just like not knowing what's going to happen. And maybe if you were like 2 days literally more patient, you would have had a nice runoff, and then you can sell, and then you have a lot more money and you're not taking as big of a loss. But it's going to be interesting to see what happens. If Cathie Wood is correct on her overarching thesis that these stocks are in deep value, that Roku, Zoom, Teladoc, Block, these things actually 3, 4, 5x, 40% CAGR, what she's been promising, then ARK Innovation is going to be one of the best ETFs of all time, and it's going to outperform in the next 4 years better than most ETFs have ever done. And some of those individual stocks, for example, if Zoom even goes to $700 in the next 4 years, that is one hell of a run. The question is if that's going to ultimately happen. So those are my thoughts on ARK Innovation. Those are my thoughts on what's going on. Let me know what you guys think about the stock, and if you have any of the major players that ARK has. Thank you so much for listening and watching. I will see you in the next one.